All right. Hello and welcome to the weekly game plan. We're going to try and keep things relatively short. We have quite a large number of things to get through. Well, as usual, I suppose. It's not the world's largest number of things, but there are quite a few things that we would like to be able to cover. I don't know what's now happened to my screen, so I'm going to just reshare that one. Oh, I pressed the stop sharing button. That's why. Alrighty. So, just going to have a look at the weekly game plan. So, there's a couple of different things. One, I've done the blog post already, so it is up. We'll embed this video because this is streaming to both TradingView and YouTube. So, we'll embed this afterwards in a sec. But we're going to try and keep this as brief as possible, so that we don't have, an hour-long video. So I'm just going to work my way basically through what we have on the weekly game plan. Well, generally just sort of the process, if you want to call it that. So we start with a sort of bigger picture. Looking at the S&P 500 is the first one, and we sort of pointed out that there might be this little inverse head and shoulder situation happening here. It's not as clear if you look at the candles as if you look at the just the line chart. So I'm just going to remove most of these indicators, and there you can see there's a much clearer sort of indication of that inverse head and shoulders on the S&P 500, and this is kind of where what's been leading that comment that we made about it last week. So it does seem to be set to be moving to new highs. It doesn't seem that there's any real issues here. We've obviously had quite a bit of sort of fundamental news, the whole art of the deal rubbish that Trump tried last week. No more stimulus, then yes, actual stimulus. And I don't know, it's just noise at this stage. But it does seem as though the market is wanting to move slightly higher, which is relatively encouraging. Then looking at NASDAQ, very similar picture. We kind of, saw it break out and retest this level last week. It was very, very close. It managed to sort of hold the level and break to new highs, and a very similar inverse head and shoulders picture happening here. Same happening on the Dow Jones Industrial Average at this stage. So, there's nothing really too much to comment here, other than it does seem that we have a break of this downtrend, inverse head and shoulders. Things are looking relatively strong. So unless there's some major fundamental catalyst that derails the market, I don't think that it's going to come down. I mean, it might, predicting in the very, very short term, like what's going to happen next week is somewhat more challenging than what's going to happen over the next 2-3 months. So let me say for the next 2-3 months, it's relatively comfortable and confident that the market is going to probably push to a new high. Whether or not next week is going to be the winner, we don't quite know. Anyway, looking at this, the Philadelphia Semiconductor Index, SOX, is something that we've been tracking. It's gone on to make a new, I think this is an all-time record high, most likely. And it's interesting to see, there's a couple of things here. One, that bilateral nature of the triangle formations, right? So this is a flat bottom triangle, broke higher, and it's gone to now sort of make a new high. So this is not the world's most bullish candlestick formation. So a gap lower could potentially be a reversal here, but I guess we'll see. This index is obviously not as important as the Qs, but it's definitely something to keep an eye on. Then we also looked at the transportation average. So last week we kind of said, look, there's a potential of a little head and shoulders here. It's broken this high. It's gone to break sort of the previous swing high as well. So it seems as though the market is looking relatively strong. Again, not the most bullish candle formations above the level, but in general, it seems as though the trend is definitely up. So I'm actually going to remove these little annotations here. And we've just marked some of the demark levels. So nothing too major, really. Looking at the dollar index, I've actually taken off the block that we had in here. So this is the previous one. So I'll just show you. This one is just sort of OTC data, and the other one is DMA data. So this is the block that we had in here, basically a consolidation, looking for a reversal. this trend line had broken that was down here, so it was really starting to look as if though we might see a move back up to sort of the 200-day moving average, or maybe even the top of the longer term range. But it's starting to look as though we might actually see a little bit of further downside. So I'm starting to think that this situation happening here is similar to what this is here. If we see here is a inverse head and shoulders as well that faked out, and then we actually managed to push down and make a new low. So here we have an inverse head and shoulders. Some saw it. It seems to have faked out. Do we now see a push to a new low? Now, note that this is October to April is this move, right? So October to April is quite a long period of time. In general, though, kind of this leads me to believe that we probably see a protracted period of dollar strength. I don't know. Also, the U.S. election is coming up, and that's going to be a very, very big thing, and we need to be very cognizant of basically what's going to be happening there, because aware of that. Sorry, I've got a little green bird on my shoulder making quite a bit of noise. Anyway, again, VIX not really saying anything to us. VIX and the Nasdaq not really saying anything to us. It looks, VIX coming down. Markets going up, makes sense. Rand dollar, we've actually removed most of our annotations here, simply because we were starting to get a little too biased by the look of things. We had marked in this level here, which doesn't really seem to make all that much sense anymore. What we're seeing now is basically just Dow theory stuff, right? Lower highs and lower lows. So maybe continuation of strength on the dollar index. If we see that keep pushing, we'll probably see the rand sort of keep pushing. So sorry, dollar weakness. As long as this dollar index keeps coming down, we should probably see the rand sort of continuing to gather strength. So I think that's probably the most likely case. But for now, no real levels, bias slightly towards rand strength, right? Looking at the oil price, looking at Brent crude oil last week, we kind of pointed out this level was broken, and that we thought that we might see a continuation of the sort of general downtrend here off this 200-day moving average. Would be perfect. That turned out to be a fake breakout, or fake chow, as some call it. And we had quite a strong We had quite a strong bounce from that on Monday, and we settled back above this 200-day moving average. So we'd like to see, potentially looking for longs, if we can get above this 20-day moving average, the red one. Then we might have a sort of a trend change situation, which is kind of where our head is at in the longer term. We're quite bullish from a sort of structural, the seasonality where oil is generally weak, but in general, we're quite bullish. So I think that if we get this, if we get this kind of, you can look at that picture as well as a potential long setup, right? So what would be really nice for us to confirm is if we can get a daily close above this 20-day moving average, and we can maybe take a long position here. In fact, taking a long position here would not necessarily be the craziest of ideas, as is. In any case, okay. So let's look at some individual stocks, some of the South African stuff. We're going to try and move through most of them, and see how much we can get through. Absa Bank, we're not really going to say too much here. I think we pointed out on a lot of the banks last week this resistance level, 93, it held. So it's kind of in the middle of nowhere. There's no real high probability setup here at this stage, not on Absa at least. We're still keeping eyes on 93. Basically, ANH, or Anheuser-Busch InBev, we pointed out last week. We were relatively skeptical because we did get a close below that swing low, right? Yeah, as it turns out, skepticism was wrong. It bounced, so we'd now like to see it. So this is a trade, unfortunately, we didn't get into, but it does seem that this is going to, very likely play out. So it'd be nice to get a confirmation sort of above the highs here. But from where we're standing, there's no real super high probability entry here, unless you think with a much longer term hat on. If you're trying to trade this formation, you're already halfway to target, so that's not necessarily the high probability play. But from a longer term perspective, it does look all right. We have basically our first sort of buy signal, if you want here. I'm going to take that out. That's really not very nicely drawn. There you go. We have our first little buy signal here, and it's a move through the zero. So we've got 2 buy signals there. We've got the relatively proper solid push up here, and we're starting to kind of outperform. This might be a slightly longer term long trade. This formation in itself is short term in nature. If you do think with a longer term hat on, you might want to look at somewhere considerably higher as a price target. So ANH definitely something to keep an eye on. Aspen, we pointed out a little bear flag last week. That bear flag seems to not have played out. It broke sort of below it a couple of times, but you can see by the candle formations here, they tried to sell it down and they couldn't get it down a number of different times. And if you start looking at some of the momentum stuff, you can see also that we have signs of sort of bullish momentum picking up. So we've set some alerts here above 120. If we can get a daily close above that, we might have a long trade on the cards. AVI, as we pointed out, this relationship with the 200-day moving average, it did manage to get above it. So that's relatively positive. We'd now like to see this consolidation break, because as you can see in history, it has broken above this already, above the 200-day moving average already, but they never had a bullish break out of this out of its consolidation. So now we'd like to see a bullish break out of this consolidation before we're convinced that there's a long opportunity here, but it's still keeping an eye. Bright, looking good. No real comment here. Broke the level. Seems fairly bullish, sort of constructive price action in terms of how the candles are looking. So all on track still for the 200-day moving average, most likely. So no real comments there. BHP, interesting. It kind of made it halfway through. We looked at this hammer. We saw it as a potential for a bounce. It hasn't really sort of gone back to above entry or anything like that. So yeah, bias still slightly to the short side. This last day's candle is looking like a bit of a spinning top. No real signal. Like if you're not in a trade here, there's no high probability setup at this stage. So yeah, nothing really too major. Xaro, quite interesting. So we had like a whole bunch of long and short mixed signals on Xaro last week. So we kind of sat back and said no trade. So it's interesting to see how we actually now are starting to see a bit of a bullish swing in terms of momentum. We've got a buy signal on the MACD. We've got 1, 2, 3 buy signals on the stochastic. So that's quite interesting. We know we've been a relative outperformer for some time. So it's the reasons for being bullish is obviously, those are still there. They haven't really changed. We did see now a break above this 124.50 level. And if we break this little downtrend here, we might actually could use that as a little high probability trigger. You could stop just below this level and maybe look for the top of the range. So that's something to keep an eye on for the week ahead. First round, no real comment here. I mean, we've tested this level significantly. It bounced down. So, if you manage to keep an eye on price action and get to short around 42, you're doing all right. Right now, it's in the middle of the range. There's no high probability setup. So there's nothing really to do unless you're already short looking for the support level. So I guess, for the week ahead, again, we're keeping an eye on sort of 42 and 37 or around that 37 zone. It hasn't been down there in a while, so we'll have to see how it behaves. Growth point, it never actually managed to break this trend line. So we were keeping an eye on that trend line sort of break last week. And it actually managed to put in a nice little reversal there. So that puts our bias again towards the short side. But for now, no trade. We'd like to see this trend line break higher before we commit to any sort of ideas. And if you're, we never actually took a short position when it bounced off there. So we missed that opportunity, I guess. Nedbank, interesting to see how this little downtrend line has been broken and is still being tested. We're sort of approaching a potential crossover here. We haven't crossed it just yet on the 50 and 20-day moving average, but it's walking the line quite nicely. It's holding. So we're still relatively bullish as long as it stays above this trend line. Still looking for that 128, sort of 130 rand, 200-day moving average level. Momentum-wise, nothing really, spectacular going on. So it's kind of like a It's kind of like a pup trade, really. But in general, as long as it holds this line, it's looking all right. Redefine, again, with the penny stocks, I guess. So be careful. This is relatively high risk. So, willing to take a long position here, but not necessarily in growth point, which is interesting. So it could even be a pair trade idea. Somebody who wants to do that analysis, we'd love to see it. Anyway, sort of, if you were to go long here, you're basically going long off the idea that this channel line is going to hold, stop below the swing low. The sort of short-term trend line has broken, but what it does offer is a really high risk-reward ratio, which is generally the sign of a very low probability trade. But if you do get this trade, I mean, you're risking, say, 25, 30 cents to make potentially R2.60, right? So that is really, really high risk reward ratio, but it's not necessarily a very high probability trade. Looking at Remgro, we see that there is a this little level that we pointed out last week. Actually, we closed above it and reversed beneath it immediately again. So right now, no real trade, still sort of watching to see whether or not buyers step in above 95.50. If not, then, for now, there's nothing really to do there. Sasol was also a relatively interesting one for us last week because we saw this hammer. So, there was all this bad news and oil stuff happening. And there was some fundamental sort of news on the stock itself. So things were all looking really bad. But this hammer basically kept us out of taking shorts, which seems to have been the right call. So it's kind of in this zone here now. I mean, let's watch it. Honestly, the truth is there's no high probability setup here. Momentum is bearish, yes. But I mean, this slope is not very convincing. If you look at the MACD, I mean, at the stochastic, that's also kind of just wishy-washy in the middle of nowhere. It's started recently sort of underperforming, but we'll have to give it some more time. So for now, Sasol, no trade. I mean, it's just sort of going sideways. At some point, it'll break this consolidation in some sort of a direction, and then we can commit. But until then, it's probably better to just avoid it. Tiger Brands, nah, I mean, no real comment. So far, so good. Telkom, what's interesting here is we've been watching this, this 200-day moving average because it sort of converges with a bunch of trend lines. We've got a whole bunch of moving averages converging at the same time, and we seem to have this general sort of turning situation that's happening here. So that's pretty interesting. We'd like to see this thing sort of continue to move higher. At this stage, we think it's a good long trade. And we're looking to these sort of marked out levels as potential targets. Vodacom, we've set alerts at 125. What's interesting here is we see that we have the first of a few potential sort of buy signals here. So we'd like to see this move up above zero, but that is generally looking relatively good. Okay, it's an underperformer, but generally it's starting to look more and more constructive for a long. So alerts at 125 to see whether or not buyers, if it can break up through 125 and remains well bid there, then maybe we see this move up to like the 140s, 135s areas, right? Woolies, I guess nothing really to say here. So far so good. Stick to your stops, sticks to your things. Looking more and more bullish, I guess, from a momentum perspective. I think let's just watch out for potential for this thing to cross over, but I mean, it's going to be a little bit noisy at this stage. So for now, I mean, this is a relatively decent long trade. Most of last week did pull back, although it's still in the money. Stick to stops, right? You can maybe even move the stop to this 35.32 level, which is just below the 200-day moving average. That might be too tight. That might stop you out unnecessarily. And then lastly, Discovery. Looking at this one, so we've got a nice little uptrend here. There is some signs of a little bit of divergence. Like if you look here, these are very, very, very technically higher lows, and those are higher lows, and those are lower lows. Right, so that is something to look out for. If you look at a RSI, which I haven't got on here, it becomes a bit more obvious. In any case, so we've got alerts sort of around this 125 level. If this does break below here, and we see a bit of a conviction, if you will, from the selling side. So if we see lots of sales volume come in, this could be like a little flag set up, or maybe even just to move down to 108, 110, around to this 200-day moving average. Alternatively, if they defend this 125 level, so it's going to be key to watch, I think. If they defend the 125 level, there's lots of buying interest in there, and every time it comes close, they sort of lift it up above higher. That's a nice place to get into the trend. So, or to get in for a long position to follow the trend. So for now, there's no real super clear setup. It's just we've got a key level that we've got to watch, which is 125, which is where we set our alerts. So I'll actually just mark this out. Just so that you can see sort of visually. So that level there. And you'll see if we take the next day straight down, right, that is a convergence of a moving average and this and the support line, right? So, or the trend line. So so that's going to be a relatively interesting one to watch. Honestly, if I were to follow my gut, I'd probably say it'd probably be a buy of 125. But if it does if it does sort of hold below 125, it might be a good level to short from. So and that's that. So that's that for the weekly game plan. Couple of ideas, couple of comments. Let me know what you guys think. We're gonna put this on the blog post as soon as we can. It just needs to propagate through YouTube and all that kind of stuff. And other than that, I hope you guys have a great day. If you like, press like. If you don't, let us know. And tell us what else you would like to see. We could maybe have a look at that during the course of next week. Also, what we want to do is on a weekly basis, if you guys ask us stuff on our Twitter account, which is @HarinaCapital, then we'll do a little short video to give you some feedback in terms of what we think. So stupid stuff, like all the stupid questions that you might have. And I mean, I was saying stupid stuff is maybe bad, but what is a CFD? How does how do you determine a stop loss? I don't know. Whatever you want to learn, we're happy to have a real trader answer you. So we've got a couple of guys that it might not always be me. Actually, it'd be better if it wasn't. So yeah, let us know. Hope you enjoy. Have a good week. Stick to your stops.